Okay, my beautiful friends, here we go, and we again have to talk. It is Thursday, December 30th, 2021. Let's start off with the economic news here pre-market. Well, we just found out, again, this is a weekly occurrence every freaking week. It's around the same number. Another 198,000 people applied for first-time unemployment benefits last week, and continuing claims 1.7 million for last week. Over 1.7 million. And this is supposed to be a good thing because if you were to turn on, again, the propaganda ministry, freaking CNBC, Bloomberg, one of these damn things, they're going to tell you it's great news because it could have been worse. People can't be worse. At one point, they're going to run out of people to count. All right, it's insane. Every week we're losing around that 300,000 new claims every freaking week. Net every month we're losing jobs. Our economy is in free fall. It's out of control. But again, everything is just fantastic. Homelessness exploding at its fastest pace on record. Debts and deficits completely out of control by design. It's the sickest thing in the face of the earth. Truly. Anyway, in the face of, yet again, more bad economic news, let's look over at the market. Stock futures are higher. Imagine my shock. Oh no, really? Yeah, stock futures are higher. Not dramatically, but higher nonetheless. Let's look at the setup here this morning. Yield curve looking good. 10-year yield 1.53. Dollar about at the flat line. Crude oil over $76 a barrel. The MMRI still in the green, looking okay to me. So the setup for the market's not bad. Meanwhile, people, we got more calls here. More bear calls on the market and more market warnings. Let me ask you. This is so sick. Over the past year, how many times have you and I heard from major banks warning on the market, repeated warnings over and over and over? And what has Greg Mannarino told you every single time we heard from these mega banks about warnings on the market? I said ignore them because the market's going higher. And that's exactly what has happened. I can't stress this enough to you. The more bearish people become, the more warnings that we get on this market, the more bullish I become. That's the truth. Look, this is not a guessing game, all right? You and me don't have to guess about a damn thing. We just got to know where to look. What are we doing, people? We're following the dynamics of the market that we talk about every day. Only the grossly misinformed or people who are deliberately being made to feel afraid are the ones that they are targeting. You and me, we laugh in the face of fear because we know that fear is an opportunity. And that's what I tell you time and time again. It's just not going to stop. Now, I want to bring up a couple of other things to your attention. This is just... You're going to love this one. So the new catchphrase being thrown around, sit down for this one. Inflation inequality. Inflation inequality. You see, in a society where everyone must conform, everyone must be controlled, okay? Now we have this new thing, inflation inequality. I dare you to make that up. I couldn't make that up if I tried to. So basically what it comes down to is what you and I already know. I have explained to you since, well, let's just say it together, time immemorial, that the middle class is being erased here. And inflation is in fact hitting people of the middle class and people on the lower rung of society. We used to have a 3-tier society. Now we're going to a new demographic, extreme haves, extreme have-nots. I've been telling you for the longest time that if you're well off or you're rich, yeah, sure. Inflation, it's bad, but it's not really hurting you. But if you're a member of the middle class or you're in that lower rung of society, relying on some kind of assistance, well, you're in a lot of trouble. Does that sound familiar to you? But now it has a catchphrase: inflation freaking quality. I dare you to make it up. I dare you to do something like that. So anyway, that's the setup for the market today, people. But as I've been explaining to you, well, I guess also since forever, we are not going to change at all. We're not going to deviate from what we are doing already, regardless of how many freaking bear freaks are going to crawl out of the woodwork. Look, yes, the market is distorted. The market is twisted, but it's been this way for a very long time. It comes down to that people are being lied to on an epic scale. Yesterday, the day before that, the week before that, all about the Fed. They're going to pull the punch bowl. They're going to taper. They're going to meaningfully raise rates. You got to be kidding me. Who's buying this? But that's, it's getting people rattled, it looks like. And I say good. Let these people get rattled. All it's doing for you and I is creating yet more opportunity. The market, in my view, is going to continue its march higher. The bad economic news is not going to stop, all right? When we actually do get good economic news, the market will crater, all right? The only reason why the market is going higher is because of all the bad economic news. It realizes, that the Fed is going to keep the punch bowl in place, which it absolutely will. The Fed hasn't tapered. They're not going to taper at all. There will be no meaningful rate hikes despite inflation inequality. I can't believe that this has a title now, inflation inequality. It's insane. But that's just the way it is, in this twisted environment. What else did you expect? I mean, it's laughable. It really is. But at the same time, look, it's sad. Every week, 200,000 or 300,000 people applying for first-time unemployment benefits, continuing claims coming in at like nearly 2 million per freaking week. But so good. We're doing so great, and it's fantastic, and it's tremendous. Look, with regard to inflation, people, you know this as well as I do at this point. You haven't seen anything yet. The Fed has no intention on stopping. None whatsoever. What they do intend to do, what the Federal Reserve clearly intends to do, is keep the pressure on. Again, what are we witnessing here? An elimination of an entire class of people on a worldwide scale. More control mechanisms. It's so sick here. They're already talking about new variants. Have you been paying attention to this? I don't want to talk about this stuff anymore on this blog. You know what happened when I interviewed that doctor? They took down that video. You're not allowed to know the truth here. But in my newsletter, again, link in description of this video, I can put anything I want there. There's no curtailing of information, and I share a lot of things with those of you who do subscribe to my newsletter that I can't talk about here. So if you have not yet, people, subscribe to my free newsletter, it's really free. Please subscribe right immediately now. In fact, while I got you here, before you forget, again, check the description of this video and click on that link. Do it. I'll sit here and wait a second. I want you to click on that link. Did you do it? Okay. And I want you to subscribe to my newsletter, people. As I've been telling you since forever, I'll never let you down, and you all know that. But we got to work together. This blog is all well and good, and I cover a lot of things here that are critically important to know. But you got to expand your horizons a little bit, all right? So again, please do subscribe to my free newsletter. All right, people, look, let's summarize real quick. So again, in the face of bad economic news, and it won't stop, stock futures are higher. The setup for this market is pretty sweet. It really is. We got, again, a yield curve, which is looking good, 10-year yield looking good, MMRI looking good, dollar, the relative strength of the dollar relatively flat today, crude oil doing exceedingly well, and it's going much, much higher. So you tell me, what do you think, really? Where do you think this market is going to go? You really think that all these bears that are coming out of the woodwork are going to be correct in the short term? No. In the long run, absolutely. I mean, we are headed towards an event, a financial meltdown of truly biblical proportions by design. That's going to be the grand finale moment. The grand finale moment, people, in this market is going to be, biblical. I don't know another way to put it. And it's a resource problem or an issue that they're setting up by design here. A collapse, a meltdown in the debt market, unlike anything that has ever been witnessed in the history of the world, is coming. I don't even care when that is, and neither should you. Okay? We're looking at the dynamics driving the market today. And at the same time, understanding that things are going to change. So that's why we are hedging ourselves, becoming our own central banks, betting against the debt, holding anti-debt units while at the same time being long the market. How can we lose? We can't lose with this strategy no matter what they do. We're literally invincible. I want you to understand that. But I also understand that not everyone has the means to do these things, and if you have to pick one thing, it should be physical silver. Start loading up. I got little things all over my freaking desk here. Look at this. These little pieces of silver. They're all over the place. It's my favorite asset of all time. I like looking at it. I like touching it, kissing it. Yes, you know I'm not well. All right, people, important video. Please share it. Get this information out there. I'm counting on you to get this information out there. Share this stuff on your social networks. Talk about this stuff. And we got to raise awareness. That's it. I'll see all of you at the end of the day. It's going to be just lovely as usual.